Let's begin with Rivian. It's still 30% above its IPO price, but $80 billion for very few deliveries. You sticking with them, Rivian?
Yeah, so I do think that this is, in Adam Jonas's words at Morgan Stanley, this is the one that could challenge Tesla. I believe he has a 147 price target on the name, and there are higher price targets across the street, Kelly. For me, this is the future of EV. Tremendous amount of competition. Yes, I get that. They're going to be in the charging market as well. And people have to realize it was a slow go with Tesla. They had a ramp. They're going to have the same issues as well. Maybe not as bad. Quite frankly, they're already approved to be in all states where Tesla was not allowed to be in all states from its inception. So that already is a bigger tailwind than Tesla had.
All right. Sticking with Rivian, what about Clear, ticker YOU? It's still about 9% above its IPO price. The company provides those expedited security entries into large venues and airports. They went public in June. Clear, why is that one, Stephen, named that you like and you think people should stick with here?
Oh, look at the chart on this one. This one was decimated. This one was beaten up. Every time we get any headwind or any negative news, Kelly, on the virus or on the variant, this one gets its legs cut out from underneath it. Just look at the chart. It's been totally decimated. But now if you look at the chart on the airline stocks, they bounced pretty well off their recent low. This one didn't up until last week or so. So I started pounding the table on this one. I own it. So I said this was a tremendous discount. You should take advantage of the pricing on this one. It will bounce the way the airlines bounce. I started talking about it again at around $25. We're somewhere in the low to mid 30s right now. For me, I think it's probably a 45 to back to its recent high of $50. This one I'm sticking with. They're not only in the airports, Kelly. They're in sporting events. They're every place that you're going to want to be. They're going to be in corporations with health paths, et cetera, et cetera.
I see them more and more. I totally take your point. Let me throw you a curveball. Can we show the chart of Virgin Orbit again, Steve? The spinoff of Virgin Galactic, or maybe vice versa. I know you've been, a sort of suffering investor in the original Virgin stock. What do you make of this IPO? Are you involved here?
I am not involved here. And if you look at the Virgin Galactic, I bought that one around $15. If you look at how that just took off, and this one was, for me, I thought it was going to be off to the races. I thought it was a point of things to come. And I've been upset with management, to say the least. They don't get in front of any negative news. You've had insiders selling this, and the stock has plummeted.
Yeah.
So for me, you need to really tell the story, or the market will tell the story for you. You've had delays. You've had exits by insiders. It's not a great picture. I am still long, unfortunately.
Yeah, it is. Picture that even more difficult in this chapter today. All right, so finally, to the worst.
And I will tell you,
sure.
Before we tie a bow on that, they need to start talking about point-to-point travel. Forget space travel at this space tourism. Talk about New York to London in 90 minutes, and the stock will be back at the old highs. Go ahead. Sorry to interrupt you.
No, you've been saying that for a couple of months now, and maybe at some point they'll look at the shares and listen. So speaking of shares, the worst performers this year in terms of the IPOs, Poshmark, Oatly, Oscar Health, we're talking about 70% plus declines from their year highs. You don't own them. Who should?
I don't own them. And, when you look across Poshmark, Poshmark had a huge tailwind from the pandemic, from the stay-at-home. It was a stay-at-home stock. But if you look at what's really rallied in retail, it's been the in-person store experience. And Poshmark does not check that box. I don't own it. I don't intend on buying that one. Oscar Health, this is kind of an interesting story. Goldman Sachs was one of the underwriters. Goldman Sachs just this month came out, initiated on it, and put a sell rating on it, and put a $6.50 price target on it. They've had declining revenues. They have expensive premiums. I believe they're only in 18 states, but with those premiums being so high, it's kind of hard to grow the business. The one tailwind for them is that they put off to reinsurers because they don't have enough business yet to cover in case of major financial headwinds. They can't cover it by their premiums alone. Once they get to that point, the stock will be a buy, but they are not there yet.
All right, Steve, I know we covered a lot of ground. Thank you very much, sir. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.